G'day guys, how's it going? Someone shot me a message last week asking for a video on divergence. So divergence is something you get on momentum oscillators like the RSI, the CCI, the stock RSI, MACD. You can even get divergence there. So what I'll do is first off, I'll explain what momentum actually is in the markets, and then I'll show you how to use divergence. So when you look at the market, if you smooth it out, you get these impulse moves, these pivots, down, up, down, up, down, up, down. Momentum is essentially measuring the strength of those moves. So if you were just to look at this, that looks like a really strong move. It's a big, sharp drop, happens over not much time. That next drop, it's still a sharp drop. It happens quickly, but it doesn't go anywhere near as far. And then that third drop here takes about the same amount of time as this one did, but it goes basically nowhere. So momentum is dropping. Momentum is dying off. The selling momentum is lessening. Now, how momentum oscillators actually work, I'm going to say momentum a million times in this video, but you're going to have to deal with it. So they work based on this formula. So the closing price minus the closing price X candles ago, where X will be a different number. So the default for the CCI is 20, default for the RSI is 14. Now they use slightly different formulas to this one. That's how they get different values, but that's sort of the basic how to calculate momentum. They just expand upon it in the indicators. And so what that actually means is the indicators essentially will give you a value if we get a length 20 candles long, like that. And we use this as a measuring stick. So let's say we started at that peak and it lines up with this hammer here. So it's going to give a value for this closing price here minus that closing price there, right? And so what we'll do is we'll bring up the CCI. The CCI is the one that I prefer. I just want it to be more responsive than the RSI. It gives a lot more signals, which potentially means it gives a lot more false signals as well. But I've found it to be pretty handy for the way that I like to trade, so I'm sticking with it. If you want to add to your chart, just go up to the indicators, search CCI or RSI, and you get RSI, stochastic RSI. Now, so divergence occurs when the price action and the oscillator start to disagree. So what that means, there's a really good case of bullish divergence here. So what we have going on is price is making these lower lows, right? Lower low. But the oscillator has started to print higher lows. And so what that's telling us is, even though price is still pushing down, the selling momentum is getting weaker and weaker. So that indicates, doesn't guarantee, but it indicates that there might be a reversal soon, or at least a retracement, if not a reversal. Now you can see that played out really well because price did push up and then go and retrace. Usually you're only really looking for 2 peaks. This one was sort of 3 drives of divergence, but you can also see a bearish divergence here, right? Because the same thing in reversals happened. The price has made a higher high, but the oscillator has made a lower high, indicating that the buying momentum is now starting to dry up. So we've got our higher high, but on the oscillator, we have that would be a higher high, but then the next one is a higher low. Now, the other thing to remember with looking for divergence is it's a lot stronger signal, when it happens outside this channel. right? Because that channel is just the like average range. When things are happening in there, it's not that strong of a signal. That's just natural price, up and down movements. It's when it gets outside, it gets those extremes that divergence really becomes a stronger signal. And the same you'll see on the RSI, it's also got a channel. The same applies there. So you can see the RSI also posted bearish divergence there, which would line up with that peak to that peak. And sure enough, we had that big reversal. The CCI also identified that in terms of that peak and that peak. So the key things to look for when you want to identify divergence are the I'll just get a vertical line to sort of help demonstrate it. You want to line up the pivots in momentum and in price. So you can see here, we start our divergence there. So that's our higher high, this first vertical line, and then that second vertical line is a higher high, but it's a lower high on the momentum indicators. Right, we've done a bullish, we've done a bearish. So you can also get, it doesn't even necessarily have to be a higher high. Let's see if I can find this. Yeah, there we go. That's not a bad example. So you can see here that price, it was sort of more of a double bottom, that's pretty level. But the oscillator was still showing a change of momentum because we had a higher low on the oscillator. So that's showing that momentum is weakening, the selling momentum is weakening, and so buyers are potentially stepping in. And sure enough, after that divergence, we did get that big run up. So it's not a guaranteed signal. There are, especially in the recent bull run, there was bearish divergence every second day, and it never played out. Bitcoin just kept going higher and higher and higher. It did not care about bearish divergence. But it is a really good indicator a lot of the time, especially when we're not in a parabolic bull run. Although the bullish divergence that we've had in this run, whenever we've had retracements, has worked out as I've just shown on that move there. So that's sort of all there is to divergence. It's a pretty simple one. It does take a little bit to wrap your head around at the start a lot of the time, but once you get it, it's really simple. And to me, all you have to think is essentially price action and oscillator. I was going to say are diverging, but I mean that's the name of it. But that's it. Like your price action and your oscillator, when they're telling two different stories, that's when you can identify divergence and start to go, okay, this might be time for the trend to stop or reverse, and then base your plan around what that would mean. So yeah, good luck. I hope that helped, and have a good one.